This is a legendary question: how institutions set up the market before a trend change. They use a blueprint almost every time because they need liquidity. This setup is known in smart money and ICT inner circle trader terms as accumulation or distribution phase, and it always leaves clues. Here's the most perfect breakdown of how institutions set up a trend change before it happens based on deep market logic. 1. Liquidity engineering, trap setting. Institutions can't just buy or sell directly. They need the opposite side to be filled first. So they engineer. A. Equal highs or equal lows. They let price form double tops or bottoms, which attracts retail stop losses above below. This creates liquidity pools for future grabs. Clue: if you see a clean, obvious level forming repeatedly, that's bait. B. False trend manipulation move. Before reversing, institutions often push price in the wrong direction to trick the crowd. This is called the inducement move. It triggers FOMO, retail entries, and stop-loss placement. Example: price looks like it's breaking resistance, but it's just hunting buy stops before dropping. To accumulation distribution range, Wyckoff logic, institutions accumulate, buy, or distribute sell within a sideways range before moving the market. A. Phases of accumulation: 1 PS preliminary support, first big wick volume increase. 2. SC selling climax, big sell-off to trigger panic. 3. AR automatic rally, rebound that defines range. 4. ST secondary test, retest lows on less volume. 5. Spring fakeout, price breaks below support, then reverses hard. That spring is your gold. Institutions buy low while trapping sellers. Distribution works the same but flipped. You look for a UTAD upthrust after distribution, a fake breakout above resistance. 3. Market structure break, Chok-Chi bows. Once they've trapped enough liquidity and filled orders, the trend starts to shift. Look for the first sign of a higher low after lower lows, bullish, or lower high after higher highs. This is your change of character. Chuch equals first institutional confirmation. Number 4, imbalance creation, FVG. Institutions leave a fair value gap, FVG, when price violently moves away from the zone. Once FVG is created, price usually comes back to it. This is the entry point for institutions and smart traders. Final perfect setup formula. Here's how the full institutional setup before a trend change typically looks. 1. Clean highs, lows forming, liquidity setup. 2. Fake breakout liquidity grab. 3. Accumulation distribution range. 4. Change of character. 5. Fair value gap plus order block appears. 6. Price returns to FVG OB with confirmation. 7. Trend shift begins. Bonus tip: watch the clock. Institutions act during London Open, 7 a.m. 9 a.m. GMT, New York Open, 1-3 p.m. GMT. Closely during these times for manipulations reversals.